Good evening, everyone. Please confirm if I'm audible to all of you or not.
Yes, sir, you're audible.
Right, thank you, Evan. All right, everyone. So, as all of you have been informed in the previous class that we will be starting a new chapter today, and the chapter that we are going to start is issue of shares. So, we'll talk about this chapter, and I'm sure all of you are already aware that this is the chapter from the volume 2 of your account syllabus. All right. So, the name of the chapter is issue of shares. But before going to the concept regarding the issue of shares and the process of issue of share, I would like to first of all tell you about the basic concept of the company. Since it is this volume is related to the company accounts, accounting for the company. We will first of all learn some basic concept regarding the company, like what is the meaning of the company, what are the features, what do you mean by the share capital and things like that. And once we are done with the basic concept, then we will move to the accounting. We will talk from the viewpoint of the accounting. Uh, so we'll first of all start with the meaning of company. All right. So okay, everybody. Let's just first of all start with the meaning of company.
Here are the listings for poster call within 9 kilometers.
All right. So first of all, we'll talk about the company. What do you actually understand by the term company? Anybody want me to explain? Anybody can any one of you please explain what do you understand by company? What do you think? What is a company?
Yes, one
Company
or an
is, sorry,
expired.
company is a firm or an enterprise. Is
Yeah.
that what you're saying?
Yes.
Anybody else want to try? What is
An
actually
organization.
an organization? Or
Yeah, organized.
an organization. And Evan said it is an enterprise. So organization or enterprise, both are the same thing. All right. Anybody else want to try? What is actually a company is? Yeah.
Like a group of people working together.
Yes. Group of people working together. So wherein a group of person working together, why can't we call that a partnership? Partnership is also an association wherein or more person come together to do a particular kind of business. So why can't we call such group of people as a partnership? Why should we call that company only? Anyone else want to try? Okay, never mind. All of you almost all of you are correct, partially. But see, a company is actually this has been defined under the Companies Act 2013. Company has been defined under Companies Act. There is a specific act which is Companies Act 2013. Companies Act 2013, and there is a specific provision that defines the company. Under the Companies Act 2013, there is a special provision under section subsection 68 of the Companies Act 2013 defines the company. It says that company is nothing. Company is a company. Company is a company. You don't have to write this down right now. Company is a company which is formed and incorporated or registered under the Companies Act 2013. So section 2 of section 2 of Companies Act, section 2 of section 2 subsection 68 of the Companies Act 2013 says that any organization is said to be a company. Instead of writing the company, you can also write down organization. So any organization or an enterprise can only be said to be can only said to be a company if it is actually registered under the Companies Act 2013. Not any organization can be called as a company. Only such organization can be called a company, which is formed as per the provision of the Companies Act 2013 and also registered under the Companies Act 2013. So there is a special act which is called Companies Act 2013. In order to be called a company, an organization needs to be registered under that particular act as per the provision specified under that act. So unless and until an organization is formulated as per the provision of Companies Act 2013, and unless and until such organization is registered under that act, until then that organization cannot be called a company. So in order to be recognized as a company, one organization or an enterprise need to be registered under the Companies Act 2013. So I hope this point is clear to everybody.
Yes, sir. It's clear.
Yes, sir.
Clear now? So you can say that section 268 subsection 68 of the Act says that any organization or an enterprise be classified or recognized as a company need to be registered as per the provision of the Companies Act 2013. Now, see, Companies Act section 2 section 68 of the Companies Act defines the company, but there are certain features of the company. There are few features. These are the features of company. In order to be recognized as a company, these are few essential features. Unless and until these features are or these conditions are satisfied, a company, an organization cannot be considered as a company. So what are the highlighting features of a company? As per the Companies Act 2013, it says that one of the very important feature of a company is that company is an incorporated body. Company is an incorporated body. Right? You don't have to write this down right now. I'll show you the PowerPoint, then you can put this down later. But right now, you just pay attention, try to understand. And in today's session, we won't be going through the accounting concept. We will be just covering the basic concept of the company. We'll talk about the accounting concept in the next session. So let's talk about
Okay.
the features of company. There are a few features like in order to be classified or recognized as a company, an organization needs to be incorporated. So company is an incorporated association. Incorporated. Incorporated association. So what do you mean by incorporated association? Incorporated association means that any association of people which is registered under the Companies Act. So any company said to be can only be called a company if it is registered and incorporated as per the provision of the Companies Act 2013. This is one of the feature of the company. Next is that company have perpetual succession. Perpetual succession. Now, what do you mean by perpetual succession? What is perpetual succession? Perpetual succession, we can define the perpetual succession as uh, since company is an artificial person, it is not, it does not have any physical existence. Company is just an incorporated entity, and because it is an incorporated entity, therefore law identify it as a separate person. But since company does not have any physical existence, that means company cannot die. Company irrespective of member come or go, company will go on forever. So because company is an artificial person, so it does not have a restricted span of life. Death of its member, insolvency, insanity, or retirement of its member does not affect the life of the company. So company is something which have unlimited life. It has a, it does not have a restricted span of life. That is what perpetual succession basically means. You can also call it that it goes on forever. Goes on forever. Until and unless company is dissolved. So until and unless company is dissolved intentionally by the member itself, company, the life of the company is not getting affected because of the death of the member of the company, insolvency, insanity, or retirement of its member. Therefore, we call that company has perpetual existence or perpetual succession. All right, and then there is one more feature which is called company have a common seal. Company have company have common seal. What do you mean by common seal? The common seal basically act like a signature for the company, right? See, because company does not have any physical existence, and the operations of the company are generally managed by the director of the company. And whenever company has to basically any document needed to be signed by the company, in that situation, we use common seal. Common seal is basically it is an, how can I define it? It is a kind of instrument which is generally used by director to represent like a signature of the company. All right. So whenever a company is entering into any kind of agreement, and whenever any document needs to be signed, In that situation, common seal is used like a signature of the company. All right, so common seal act as a signature for the company. All right, so these are three characteristics. Apart from this, one more important characteristic is there, which is transferability of share. One very important characteristic of a company is that members of the company have the authority to transfer their share to some other person. The shares held by shareholder of a company are transferable. So that means the ownership in a company can be transferred in accordance with the manner specified in the Articles of Association. Article of Association is basically a document that contains the rules and regulation of the firm. So if any member wanted to, if any member want to transfer his share to some other person, then he needs to go through the Article of Association. He need to comply all the rules and regulation. Once all the rules and regulations are complied with, such person is eligible to transfer his share to some other person. There is no restriction. There is no restriction on such person if he want to transfer his share to some other person. Let's suppose if I have bought the share of let's suppose Apple or Tata or Wipro or any other company, any other multinational company. If I want to transfer my share to some other person, there is no restriction. I am completely free. I have complete authority. I have complete eligibility to transfer my share to some other person if the rules of the Articles of Associations are not violated. If I'm complying with all the rules and regulation, then no one is there to restrict me uh, to transfer my share to some other person. So this is very important characteristic of the company, that members or whoever willing to become the member later, if he want to transfer his share to some other person, he is completely in a position to transfer his shares without any restriction. We covered four characteristics. Apart from this, just a minute, four characteristics are covered. Okay, there is one more characteristic which is called limited liability. Limited liability. What do you mean by limited liability? Like you must have heard of the proprietorship. Like proprietorship is what? Proprietorship is a kind of business which is owned and controlled by only one person. Owned, controlled, and managed by only one person. All the
Yeah.
asset belong to that proprietor only, and all the liability has to be borne by that proprietor only. But in case we also covered the concept of partnership, wherein in case of partnership, what happens that partners own the asset and the liability get divided among all the partners. But one of the very striking feature about the proprietorship and partnership is that liability in both these form of business, in case of proprietorship as well as in case of the partnership also, liability in both these cases is unlimited. It means that unless and until all the liabilities of the firm or the business get discharged, partners cannot be free unless and until all the liabilities are discharged from the business. Unless and until all the liabilities are paid off, neither the proprietor nor the partner can be free. Even if let's suppose if the funds are short, if business does not have sufficient amount of fund available, then in such a situation, partners may have to bring some cash or fund, arrange fund from their personal sources as well. So that is what unlimited liability basically means. Until all the liabilities of the firms are paid off, no partner or the proprietor will be discharged off from the liabilities. So he will be liable. Proprietor will remain liable, or partners will remain liable until all the liabilities of the business get discharged. But in case of the companies, it is completely different. In case of the company, members who are becoming the shareholder in a company, let's suppose Mr. X is investing. Mr. X have invested, let's suppose, 20,000 in a particular company. All right. Mr. X have invested 20,000 in a company. And if, let's suppose, liability upon that company is of rupees 5 lakh, then what happens if company want to raise funds from Mr. X, then company can only raise up to rupees 20,000 from X. X will be liable to pay 20,000 only, not more than this. Even if the liability of the company is far more than the amount of capital that Mr. X have invested. But since it is a case of company, that means his liability will be only to the extent of 20,000. Company cannot claim or ask Mr. X to pay more. He will be liable to the amount of shares that he have bought in that company. If he have invested 50,000 in that company, his liability will be restricted to the amount of capital that he have contributed, or the amount of shares he has subscribed, not more than this. Even if the amount of liability upon the company is, let's suppose, 1,50,000, in such a situation also, company won't be able to ask a shareholder for more than 50,000, because he only bought 50,000 of shares in that company. So what I'm trying to explain here is that this feature is completely different from the other form of business. Like in case of proprietorship or partnership, partners have the proprietor have unlimited liability. That means unless and until all the liabilities of the business get discharged, no partner, either the proprietor, is said to be free, or he cannot be he cannot be discharged from his obligation towards the business. But in respect of the company, in case of the company, members or the shareholders will be liable to the amount of share capital or to the amount of share that they have subscribed in the company, not more than that. I hope this point is clear to everybody. Is it clear, everyone?
So can you explain
Yes,
it
sir.
again?
Anybody want me to explain it again?
Yes, sir. Can you please?
Yes.
Okay. What I'm saying is that let's take an example of a partnership business. Or there is proprietorship business. And then we have company. What happens in case of partnership? Let's suppose partners have contributed 1 lakh each. Let's suppose there are 3 partners, X, Y, and Z, and they have contributed 1 lakh each into the partnership. And like, let's suppose, for example, that there is liability upon the partnership business. It stands at liability is equal to 1,50,000. Now tell me, since the liability upon the business is 1,50,000, but the amount of capital that is contributed by the partners is only 1 lakh, then how much liability can be paid off out of the capital? Tell me, how much liability can be paid off out of the capital? 1 lakh, yes or no? 1 lakh can be paid off out of the capital, yes or no? We can pay off only 1 lakh out of the capital, right? Is that clear, everybody? But there will be outstanding liability of 50,000.
50,000.
Now tell me, how are we going to arrange this fund from? From where this fund will be arranged? This 50,000, because this is the outstanding liability that need to be paid to the that need to be paid by the firm. This has to be contributed by the partner again. X, Y, and Z will be contributing towards this loss or this liability as well. And the question arises, where do they going to contribute this fund from? They will be bringing this fund from the personal source. Their personal asset or personal fund will be utilized to pay off this liability. All right. Is it clear? In case of partnership, liability of X, Y, and Z is not discharged unless and until all the liability of the firm is paid off. Am I clear, everyone?
Yes, sir.
Yes.
Yes.
Is this clear now, everybody? Now,
Yes.
see, but let's take an example. Let's also consider the case of the proprietorship system. Let's suppose there is Mr. X who have started a proprietorship business by contributing 2 lakh into the business. So total cash available in the business is 2 lakh. Now what happens? The liability of the firm or liability of the business rises to, let's suppose, 5 lakhs. Now the thing is, the cash available in the business is only 2 lakh, but the total liability upon the business is 5 lakh. Then how much can be paid off to the amount of cash available in the business? Only 2 lakh can be paid off, right? The question arises, how much is it still outstanding? 3 lakh is 3 lakh will be still outstanding, right? 3
Yes.
lakh will be outstanding. Now the thing is, who is going to bear this 3 lakh of outstanding liability? Only proprietor will be bearing this. He will have to bring in more cash from his personal resource to pay off this liability. Yes or no?
Yes, sir.
Yes.
That is what we call unlimited liability. In both the situation, in case of the partnership and in case of the proprietorship business, partners or proprietor is not discharged unless and until all the liabilities of the business or the firm is paid off completely. But let's talk about the company. Let's suppose let's suppose Mr. X have bought shares in a company. Let's suppose Mr. X have bought a share in Apple costing 1 lakh. He have invested 1 lakh in the Apple, right? And let's suppose total liability of upon Apple stood up to 25 lakhs. All right. So tell me, for what amount Apple can ask Mr. X to pay? How much amount can Apple ask Mr. X to pay?
1
Let's
lakh.
suppose 1 lakh only, right? That after utilizing this amount, pay off the liability, 24 lakh of outstanding liability will still be there. Now the thing is that whether Mr. X will be required to contribute towards this liability as well, yes or no? Tell me.
Yes, sir.
Whether he
Yes.
can be asked to pay off this liability, whether he will be asked to pay off this liability, yes or no? In case
Yes.
of the company, no. Why will he be? See, he have bought the shares of rupees 1 lakh only. And because he have invested 1 lakh, so his liability is only to the extent of 1 lakh. He will be liable for 1 lakh only. And if he have already paid 1 lakh, and after paying 1 lakh, there is still a liability of 24 lakh, whether he will be required to pay more from his personal account? Answer is no. He is not responsible to pay more than 1 lakh. And since he have already made the payment of rupees 1 lakh, he cannot be asked by the Apple to pay more. Let me give you another example. Let's suppose he actually bought shares in Reliance India Limited. Yeah. Mr. X has bought shares in Reliance India Limited, and the value of shares that he have bought is 50,000. Out of 50,000 of shares, he paid company, he have already paid 30,000 to the company. 20,000 is still outstanding. 20,000 is still unpaid. Out of the share, he have actually bought shares of these 50,000, but out of 50,000, he actually paid 30,000 only to the company, and 20,000 is still unpaid. Now see, let's suppose the total liability upon the company, total liability of Reliance India Limited, total liability upon Reliance India Limited is, let's suppose it is 60 lakhs. All right. Now tell me, how much Reliance India can ask Mr. X to pay for? How much Mr. X can be asked to pay? He have already paid 30,000 to Reliance India Limited, 20,000 is still outstanding. How much Reliance India Limited can ask Mr. X to pay more? Tell me, anyone?
So 20,000.
Yes, only 20,000 can be. All right. Because Mr. X have the limited liability. Mr. X have the limited liability to the extent of 50,000. And see, since he have already paid 30,000, so his remaining liability towards the company stands at 20,000 only. He can be asked to pay remaining 20,000. I hope this point is clear, everybody.
Yes, sir.
Yes, sir.
Is it? So that is what I was explaining, that in case of the company, liability of the partners are unlimited, limited. Liability of the members are limited. So these were the 5 characteristics. Let me give you a quick recap. Until now, we just discussed the meaning of the company, wherein I've explained that company is an organization or an enterprise which is formed and registered as per the provision of the Companies Act 2013, or under any other act previous to Companies Act 2013. Prior to Companies Act 2013, since Companies Act 2013 came into existence in the year 2013, but any company any company which is formed and registered prior to 2013 needed to be registered under the Companies Act 1956. So the actual definition of the company is basically a company is a company which is formed and registered under the Companies Act 2013 or under any other previous law. All right. Now we understood 5 features of the company, which include in companies and incorporated association. That means it is a registered body. It has a perpetual succession. That means it goes on forever, irrespective of the death of the member, insolvency, or incapacity of the member. The life of the company does not get affected. It goes on forever unless and until intentionally dissolved by all the members collectively. Then there is a signature of the company which is known as the common seal, which is used to basically attach every document, which is in order to attest any kind of document, to bring to give the legality such document, we need to fix the signature of the company, and for that purpose common seal is used. Then there is transferability of share. Like in case of the company, any member can transfer his share to some other person if if all the rules and regulation as per the articles of association is complied with. Then we discuss that there is a limited liability of the members in case of company. In case of company, members are their liability is limited to the extent of share that they have got in that company, right? All right, so these are the features. All right, so we already understood the meaning of the company. As explained, it is specified, it is given in the section 68 of the Companies Act 2013. It says that any company which formed and incorporated or registered as per the provision of the Companies Act 2013 or any other previous law is said to be a company. And we'll discuss features that it is a body corporate. Body corporate basically means incorporated association, and it has a perpetual succession, it has a common seal, transferability of share is possible, and it may be sued or be sued. A company can file a court case against some person and any outsider or third party if they are willing to take action against the company, that can also be possible. Since company is recognized as an entity, as a person in the eyes of law, company is identified or recognized as a person in the eyes of law, though it is an artificial person, not a real person, because it is an artificial person having separate entity. Therefore, law entitles the company to take legal action against some person, or if any person having some problem against the company, then such person can also take the legal action against the company. So, all right. So this is the feature. And one more striking feature was limited liability. Company has the limited liability. The members of the company are only liable to the value of the unpaid shares of share capital that they have subscribed. Okay, now we will talk about the kinds of company, but before that, I want you to note this down quickly. Please write down the meaning and the features quickly. And anybody having any doubt may ask the question.
Sir, if any company which is not registered under the Companies Act 2013, hence it won't be regarded as the company, right?
Yeah, we cannot call that entity as a company. This term company can only be used in respect of those entities which are registered under the Companies Act 2013. Unless and until such entity or organization is registered under the Companies Act 2013 and have got the incorporation certificate, we cannot call such entity as the company. It can be a proprietor, it can be a partnership business, or it can be any other kind of business, but we cannot call such entity as a company. Hope you understand. All right, is that clear to you?
Yes, sir, it's clear.
I skipped a word here. Please write down after previous law or any other previous law.
Done, sir.
Done, sir.
Done. Okay. Please write the features of the company as well. These are just points. I'll share the detailed theory notes of this chapter with you in the PDF format so that you can have the clear definition of all these features. I've tried to explain all these, but I'll share a detailed theory note in the PDF format as well so that you can go through those points as well in detail. For the time being, just write these points.
Yes, sir, noted down. We have noted down.
Okay. All right. Shall we move to the next point? Okay. Now we'll talk about the kinds of companies.
Sir, can you show once again? Done, sir. Thank you.
All right. Now let's talk about the different kinds of companies. Kinds of companies. Now see, there are various kinds of companies, but for the sake of simplification, we have categorized the companies on the basis of two broad categories, which is we can classify the companies on the basis of we can classify the company on the basis of the liability, on the basis of liabilities, and on also on the basis of the number of members. On the basis of members. Right. So in case of the companies on the basis of number, we have three kind of company. One is called public company. Then we have private company. And after that we have one person company. One person company is a newly added concept. It has been recently added. Earlier, there was no concept regarding the one person company. It is recently added concept. When it comes to the companies on the basis of the liabilities, we have three categories in under this as well. It can be company with limited by guarantee. Then company limited by share capital. And then there is also a kind of company which is called unlimited company. However, this may seem a little contradictory right now that we just understood that the liability in case of the company is limited. Then how it can be possible that there is an unlimited company or unlimited liability company? Unlimited liability company is also a type of company. We will learn about this later, but let's now, for the time being, just focus upon the uh, company on the basis of the members. All right. We'll first of all talk about under this category. We'll cover the let's cover the private company first, and then we'll move to the private company. But before that, I want you to write this down quickly. Quickly write this down, everybody. Kinds of company on the basis of the members and also on the basis of the liability. We'll cover this first, then we'll move to the public company, and later we'll talk about the one-person company. Probably we'll be able to finish this part today. On the basis of member, we'll able to cover all this. And maybe tomorrow we'll be covering the concept of the companies on the basis of liability. Let me know whenever you are done, everyone. So as per this flowchart, there are six kind of company, na? Public, private, one-person company. Then there is guarantee company or share company limited by share or unlimited company or unlimited liability.
Yes, sir, we have noted down.
Then everybody else.
Yes, sir. Done.
Okay.
Done, sir.
All right. So let's just quickly talk about the private company first, and then we'll cover the public company. All right. So first of all, what is a private company? So private company is see, as per the Companies Act 2013, company which has a paid up capital of not more than 1 lakh. Company having uh, paid up capital of fees 1 lakh. This is the minimum paid up capital required to basically establish a private. If you are willing to establish a private company, so as per the Companies Act 2013, Companies Act 2013 requires you to have at least invest rupees 1 lakh in order to start in order to start a private company. We need to at least invest 1 lakh. 1 lakh is the minimum paid up capital. What is paid up capital? It is you can for the time being understand it as a initial investment value. If you want to establish a private company, you have to initially invest rupees 1 lakh. Only then you will be able to start a private company. All right. And there are certain other requirements as well. This is the requirement as far as the capital is concerned. In order to start a in order to start a private company, we need to have at least 1 lakh of minimum paid up capital. But there are other requirements as well. In order to set up a private company, there are restrictions upon the number of members as well. There should be at least 2 members. This point was about capital, and next point is about members. Companies Act 2014 says that in order to establish a private company, you should have at least 2 members. Minimum number of members required are 2. There should be at least 2 persons who are willing to start a company, who are willing to start a private company. So unless and until 2 members are there, it is not possible to start a company. And Companies Act 2013 further limit the maximum number of persons in case of the private company. In case of private company, there is a limit upon the maximum number of person, maximum number of member. There are not more than 200 members can be there in case of private company. You have to remember that. And whenever it comes to private company, how will we recognize whether it is a private company or not? First of all, we'll look into the minimum capital requirement. If the minimum capital requirement in that case is 1 lakh, then it is a private company. If the number of members are 2, but up to 200, then we are talking about the private company again. Then there are other restrictions like restriction upon the transferability of shares. There are restriction upon the transferability of shares as well. Transferability of shares. In case of the private company, members are restricted to transfer their share. Members are not completely free to.
The max member should be 200, right?
Yeah, maximum number of members can be 200 only, not more than that.
Sir, you wrote
If I wrote 200, na? Minimum 200, minimum 2 and maximum 200. And then transferability of share is restricted. That means unless the members of the existing member of the private company is agreed, no person can transfer their share to some other person. So there are the transferability of share is not prohibited, rather it is restricted. Restricted means if certain conditions are satisfied, then only members will be free to transfer their share. Unless and until those conditions are satisfied, then such person cannot transfer the share to some other person. Okay. Then there are certain other restrictions as well, like in case of the private company cannot issue shares to the public. Just private company prohibited to issue shares to the public. Prohibition on issue of shares to public. That means if private company requires money, they can only ask their members to contribute, only raise fund from members, not from outsiders. They cannot issue their shares to the public for subscription. Like any public company, a private company is not entitled to issue their shares to the public. All right. And there are a few conditions as well. In case of the private company, there is a restriction upon the number of directors they can have. Directors. See, companies at 2013 says that in case of the private company, if you want to establish a private company, if you want to form a private company, then you should have at least 2 members who can act as a director. There should be at least 2 directors in case of private company, and maximum number of director cannot exceed more than 15. 15 is the maximum number of person that can be director in the private company, and minimum should be at least 2. Unless and until 2 person are there to act as a director, company cannot be formed. So these are few conditions of the private company. Let me tell you again. Section 2, companies at 2013 define the private company as any company which have the minimum paid up capital of rupees 1 lakh. Any company wherein the number of person or limit there is limit upon the number of person, that there should be at least 2 person and maximum number of 200 person can be there as a member. Upon the private company, there is restriction upon the transferability of share. Members cannot transfer their share on their own to some other person unless and until certain conditions are satisfied. And there are prohibition on issue of shares to the public. Company cannot raise fund from the public. Only members of the private company can contribute towards the fund, towards the capital of the company. Then there are condition about the director as well, that there should be at least 2 director and maximum 15 director can operate at a time in a private company. These are few, you can say, the characteristics of the private company. All right, understood everybody? Is this clear, all of you?
Yes.
Yes, sir.
Yes, sir.
All right. Kindly note this down quickly. I'll share you the detailed notes later, but for the timing, just note this down in the notebook quickly. And we'll cover one more point about the public company as well. Done, everybody?
Yes, sir.
Yes, sir.
Okay. All right. Now let's talk about the public company. Since you understood private company, it will be much easier for you to understand the meaning of the public company as well. All right. So first of all, let's understand the public company on the basis of the capital. So companies at 2013, first of all, says that when it defines the public company, it says any company which is not a private company will be considered as a public company. You understand that any company which is not a private company will be considered a public company. But in order to explain exactly what is a public company, it has been defined on the basis of the paid up capital. So paid up capital in case of the public company is how much? Like in case of the private company, you understood that company should have a paid up capital of rupees 1 lakh. But in case of the public company, the paid up capital must be rupees 5 lakh or more. In order to start a public company, you should have at least 5 lakh or more as per the companies at 2013. This is the minimum paid up capital requirement in order to start a public company. Now, after that, there was restriction upon the number of member in case of the private company, right? When it comes to the public company, companies at 2013 says that in order to set up a public company, there should be at least how many members? Minimum number of members required is 7. There should be at least 7% at the time of the formation of the public company. So what about the maximum number of person in a public company? There is no limit on such person, such number. Maximum number can be unlimited, no limit. But there should be at least 7 members at the time of the formation of the public company, not less than that. If an association having less than 7 members, they cannot formulate public company. They will have to go for the private company only. All right. Now, so what about the transferability of share? When we formulate a public company, whether or not we will be able to transfer our share to some other person, whether transferability of share is possible in case of the big company or not. The answer is yes. In case of the public company, there is no restriction, no restriction upon the transfer of shares, no restriction, transferability, transferability of shares. Members can transfer their shares to any person without the compliance of any condition. There are no any there are no rules that restrict the transferability of shares. All right. Now, what about the issue of share, whether or not a public company will be able to issue shares to the public or not? Issue of shares. Issue of share is possible. Public company, public company may issue shares and raise funds from public as well. Now, sir, what about the number of directors? How many directors are required in case of, like, if you were to remember that in case of the private company, minimum number of directors required were only 2. But in case of a public company, because public company is a larger company, so law requires you to at least, you should have at least 3 directors, but maximum number of directors can be 15, which is same as in case of the private company. In case of the private company as well, there was only 15 directors required maximum. Correct. Like, see. So all these points are little different in case of the public company, but the maximum number of director is almost same. In case of the public company, minimum capital requirement is 5 lakh. Members, minimum member required is 7. No limit upon the maximum number of members. Transferability of share is completely allowed. Issue of share is possible. Company may raise share and issue, raise fund and issue share to the public, and director should be at least 3 and maximum 50. Right? Understood, everybody? Is it clear, all of you?
Yes, sir.
Yes,
Yes,
sir.
sir.
Quickly note this down. And this is the last point. We'll cover the other type of company, like 1% company and the company on the basis of capital as well, on the basis of liability as well in the next class. Company limited by share, limited by guarantee, or unlimited company. And we'll also cover the different type of different categories of capital. Like here, I just explained that minimum capital required is 5 lakh. Is the minimum capital, but not the maximum. There is no limit upon the maximum capital. A company can, whatever the amount that a company will be entitled to raise from the public is called authorized capital. And there are various subcategories to the capital: paid up capital, called up capital, subscribed, or there are other capital as well. We'll talk about different forms and different kinds of capital in the next class. I hope everything that we discussed in today's class is clear. Please put this down quickly, everybody.
So the issue of shares, the company may issue shares and the raise of and
Raise
that's
fund
not,
from the,
yeah. Yes.
Sir, can you explain issue of shares in public company once again?
yeah, sure. See, like I said, in case of the private company, if private company requires, let's suppose private company requires fund. Let's suppose private company requires 15 lakh more. At the time of setting up of the private company, minimum capital required is only 1 lakh, right? But let's suppose after they have started, the private company started their operation. After the operation firm business requires more fund, then from where they will be able to arrange such fund. They can only ask their members. They can borrow funds from the bank also, but when it comes to the arrangement of funds, cannot go to the public, cannot raise fund from the public. That means they are not entitled to issue shares to the public for arranging this much fund. But when it comes to the private company, if private company whenever feels the need to raise fund, whenever whenever public company is in a situation that it requires more fund, then public company may issue shares to the public and raise funds from the public also. That is what this basically means, issue of shares. We can issue company shares to the public, and company will buy those shares. They will be buying the shares of the company, and they will give money to the company. And this is how public company may also arrange fund. Apart from borrowing and or loan, a public company may directly go to the public and raise fund from the public also. This authority is only available with the public company, not with the private company. The issue of share is restricted in case of the private company. I hope this is clear, everybody.
Yes, sir.
Is it clear now?
Yes, sir.
Okay. So let's just quickly recall everything that we covered today. We started our session with the meaning of the company, wherein I gave you a reference of section 68, which defines the company. It says that any company is a company. Company is a company which is formed and registered under the Companies Act 2013 or any other previous act. We then discuss the features of the company, wherein I have told you that company is a registered association. It is an incorporated body. Unless and until any organization is registered, that cannot be considered as a company. Then we discuss that company have a perpetual succession, irrespective of the death of their member, death of its member, insolvency of the member, or incapacity of the member. Company does not get affected. Companies goes on forever unless and until members have decided to dissolve the company. But like in case of the partnership, if the partners are retiring or if partner died, then we need to the partnership agreement need to be changed, right? The constitution take place in case of the partnership. Also, in case of proprietorship business, if proprietor dies, with the proprietor, business will also dissolve. But in case of company, even the member come or go, he may die or get insolvent, or he is incapable to participate in the operations of the company. Then also company will go on forever. Company is a perpetual succession. Then we discuss about the common seal of the company that acts as a signature that is used to validate any kind of document of the company. Then companies have transferability of share, then there is limited liability of the members of the company. Then we talked about various kind of company. Apart among all these company, we already understood the public and private company, wherein I have told you that the difference between the private and public company can be done on the basis of these 5 points: the capital, member transferability of share, prohibition of issue of shares in director. In case of the private company, limit upon capital is minimum capital requirement is 1 lakh. But in case of public company, minimum capital required is 5 lakh. When it comes to the member, 2 members are required. In case of public company, at least 7 members are required. There is no limit upon the maximum number in case of the public company, but 200 is the maximum number of person that can have in case of private company. Transferability of share is not at all possible. Prohibition is upon the issue of shares in case of private company, and minimum director is required is, whereas in case of the public company, minimum director is 3. All right. So I hope everything that we discussed in today's session is clear to all of you. We'll talk about the issue of shares and further theoretical aspect of this topic in the next class also. And after covering the theoretical part, we will start with the account of the company. All right. I hope everything that we discussed is clear. Everybody, any question anyone want to ask?
No, sir, it's clear.
Clear, sir.
It's clear.
Yes.
I'll be sharing the theoretical notes of this topic, wherein all these points will be explained in detail. So you can go through those notes to have a clear understanding of all